Well, Bitcoin has done very well over any 10-year period. And at $100,000 today, it does reflect that institutions are beginning to view this as a legitimate way to store value. I'm not bearish on Bitcoin because I think Bitcoin will get to 1 million. But because of what's happening with AI and with Wall Street and Project Crypto, because we're tokenizing everything on Ethereum rather than just gold, which means Ethereum probably will flip in network value versus Bitcoin.
Bitcoin's fixed supply and growing institutional demand make its long-term rise to $1 million almost certain. But according to Tom Lee, co-founder and head of research at Fundstrat, what might catch most people off guard is Ethereum. While Bitcoin holds the reputation of digital gold, Ethereum has become the platform where Wall Street builds its future infrastructure and where artificial intelligence experiments are starting to take root. Stablecoins, tokenization, and proof-of-human systems all run on Ethereum, and every interaction consumes ETH, driving demand higher. Lee argues that the tokenization of real-world assets could dwarf gold's $21 trillion market, creating the conditions for Ethereum to surpass Bitcoin in overall value. Stick around until the end of this video to hear Tom Lee explain why Ethereum's growth could leave every other asset in the shadows.
Well, Bitcoin has done very well over any 10-year period. And at $100,000 today, it does reflect that institutions are beginning to view this as a legitimate way to store value. Because the Bitcoin blockchain is really one of the best ways to record financial transactions with 100% never failed censorship resistance, never fraudulent entry in its entire operation. So, but institutions, only about 5% actually own any Bitcoin, but 95% of Bitcoin has already been mined. It's a fixed supply. That's a stat from Bitwise. But that 5% that isn't held yet, because the other Bitcoin is basically being hodled, has to be acquired by those 95% of institutions. Plus now governments want to own Bitcoin as a strategic reserve. So if you think about how difficult it is going to be to acquire that last 5%, I can see why it would replace gold or equal the network value of gold, which is over 22 trillion, and that would put Bitcoin at around 1.2 million per Bitcoin.
In the short term, if the president continues to interfere with the Fed, is that a short-term catalyst, or are these strategic long-term arguments for Bitcoin what really matters?
It's in the short term, it's probably unclear if it helps or hurts Bitcoin, because Bitcoin also is correlated with global monetary liquidity. Raoul Pal at Real Vision put up this chart years ago that shows M2 versus Bitcoin, and it's been almost dead on at all the bottoms and tops. Once we would be through Fed interference and the Fed is easing, of course, that's good for Bitcoin. But in this period of risk off, I would say it would hurt stocks and Bitcoin. What
is the case for Ethereum then over Bitcoin?
Well, Ethereum differs from Bitcoin. Actually, Ethereum was initially a fork of Bitcoin, by the way, but with an added feature, which is smart contracts. So what they wanted to do on Ethereum was to say, let's use blockchain technology not just to store value, but now to store information. Ethereum is as a smart contract platform, actually also has something called the EVM, Ethereum Virtual Machine. So you can run entire programs and conditional contracts on Ethereum. And Ethereum itself is 100% reliable. It has not had a single moment of downtime since inception. It's one of the few blockchains that has never been down. And then if you needed to do more things on Ethereum, you can build what they call layer 2s on top of it. So Ethereum is essentially infrastructure that now is catching the attention of two industries.
Still paying taxes on your crypto gains? What if you didn't have to? With ITrust Capital, you can buy and sell crypto inside a tax-advantaged IRA, giving you a smarter way to grow your portfolio without worrying about capital gains tax. That's why they're the #1 crypto IRA platform in America, with billions in tax-advantaged transactions. There are multiple ways to fund your account. You can make a contribution, transfer an existing IRA, or roll over an old 401k or employer plan. You'll get access to a wide range of digital assets, low fees, and 24/7 trading, all backed by secure, one-to-one asset ownership with institutional-grade custody. And if you have questions, ITrust Capital offers 100% US-based customer support with real people ready to help. Click the link, use code DOSE7, and get your $100 funding bonus today. Start building your crypto wealth, tax-advantaged, with ITrust Capital.
The first is the financial sector. The stable coins became really viral, a breakaway product for crypto. And that's like the ChatGPT moment. There's $250 billion worth of stable coins. The vast majority of those are minted on Ethereum. Then the Genius Act was passed by this administration and this Congress, and that greenlighted the proliferation of stablecoins onto the blockchain. So banks are now building stablecoin products. That Treasury Secretary Besant thinks that could get to $4 trillion. That's exponential growth, burning gas on Ethereum. And then we have Project Crypto, which is the SEC wanting Wall Street to build on the blockchain. Now, all of that collectively, from a Wall Street perspective, is like 1971 for the dollar. And what I mean by that is, in 1971, the dollar went off the gold standard. So in 1971, the dollar became synthetic. And gold was what people bought as a hedge against that synthetic dollar. So you had gold as the trade, and that would be the Bitcoin equivalent. But actually, the synthetic dollar is what created the rails for Wall Street to build all their future products. The futures, curves, derivatives were all because the dollar was a synthetic product. If the dollar was backed by gold, Wall Street would be still a very small business. Well, Wall Street now is going to be building its entire infrastructure onto the blockchain. And the blockchain they're choosing is Ethereum. So this is the 1971 moment where Wall Street is essentially capitalizing on tokenizing the entire world onto a blockchain. That's a huge opportunity. The second story arc benefiting Ethereum, though, is AI, because now we're moving towards an agentic AI world, but with real products. Like AI has principally been trained on like internet and, social media. But it hasn't been in the real world because it hasn't ingested us as we moved and physically moved or even have independent products. That's a vast amount of new information for AI models to ingest and store. But then now you have to be sure that all the instructions being sent back to the robot are proof of the originator. In other words, you need a token. LLMs use tokens anyways, but now you need like a token that interacts across chains. And that's where AI is going to build on Ethereum, because you essentially need what they call proof of human. We need to prove that this lawnmower got a real instruction from another chain or another vendor. And so that is all being built on Ethereum. This is not going to be a popular statement because there's a lot of tribalism in crypto. But before this year, I would have considered Ethereum like a really good, reliable chain, but without any products being built on it, it shouldn't really do well. But because of what's happening with AI and with Wall Street and Project Crypto, I think Ethereum's essentially the value of its protocol layer, like Union Square Ventures calls it the FAT protocol, is now going to be more valuable because we're tokenizing everything on Ethereum rather than just gold. So if gold is a $21 trillion market, tokenizing the real world is orders of magnitude larger than gold, which means Ethereum probably will flip in network value versus Bitcoin.
Institutions and governments now have less than 5% of Bitcoin's supply left to acquire, and that scarcity will keep pushing the price higher until it closes in on gold's $22 trillion network value. At that point, Bitcoin would reach around $1.2 million per coin, a staggering jump from its current level near 100,000. Ethereum, however, presents an even bigger ambition. It has become the infrastructure where Wall Street is building, where stablecoins are created, and where artificial intelligence is starting to take hold. Today, Ethereum's market value sits near $480 billion compared to Bitcoin's $2.2 trillion. Tom Lee believes that gap won't last forever. If Ethereum overtakes Bitcoin in total network value, it would climb past $18,000 per coin at current supply. And as tokenization and AI adoption accelerate, that upside could extend far beyond.
I think that the distinction to make is that I'm not bearish on Bitcoin because I think Bitcoin will get to 1 million.
But what about all the other cryptocurrencies?
Well, Other cryptocurrencies don't have the network value because otherwise they're just software chains, meaning...
So you don't really believe in Ethereum as a currency. You believe in it for other reasons.
That's right. Yeah, I think that the narrative of storing value is really Bitcoin's use case. Ethereum's use case is that it's actually going to be used and burned. So Ethereum gets consumed through gas fees, and then staking is how you produce an Ethereum. That inflation rate has been below Bitcoin, actually. So if you look at it as monetary supply, Bitcoin's monetary supply is actually still growing faster than Ethereum. If I could give a little historical perspective, when Tether created the first dollar stablecoin, and they built it on Ethereum, their idea was someone doesn't always want to be long Bitcoin or another crypto. They want to be long something stable. And crypto holders weren't really allowed banking access. So they didn't have an off-ramp. So Tether built a dollar-backed coin called a stablecoin, USDT.
Mm-hmm.
In 2017, Google and the UT Austin wrote these papers claiming Tether was just a fraud. And the only reason crypto went up was because of Tether creations. Okay, so in other words, it was immediately tried to be viewed as something fake. But then Tether has since grown, and of course stablecoins have really grown in popularity. Merchants outside the US love stablecoins because they don't suffer the chargebacks. You know, credit card companies merchants eat fraudulent transactions. So merchants, they get paid, it's just as good as getting $1. In Turkey and a place like India, Tether trades at a premium to the dollar because people prefer to get that over cash because it's hard to get robbed. You know, you can use a stable coin to buy real estate in Dubai now using Tether, like $100 million transactions. So it's actually being used in the real world. Actually, stablecoin usage, 80% is outside the US. But the reason the US administration starts to like it is, number one, crypto is essentially 100% quoted in dollars. In GDP terms, the dollar is 27% of global economy. It's 55% of central bank reserves is the dollar. It's 80% of traditional financial market pair quotes. So the synthetic dollar, which happened in 1971, made the dollar 80% dominant. In the crypto world, the dollar is 100% dominant. So the US wants us to financialize into crypto because everybody prefers to get $1. Collectively, the stablecoin industry is about $280 billion of outstanding dollars. They are now the 12th largest holder of treasuries in the world. Japan owns 1.2 trillion of treasuries. Treasury Secretary Bessent thinks this market will get to 4 trillion. That would make stablecoins the largest holder of treasuries in the world. So it'll be backstopping the entire treasury market soon.
Billions of dollars in stablecoins already circulate on Ethereum's network, and policymakers are projecting that figure could scale into the trillions. That demand is hardwired into Ethereum's financial infrastructure. Every stablecoin transaction consumes ETH, reducing supply as adoption expands, which makes Ethereum both a utility and a deflationary asset at the same time. If Ethereum ultimately overtakes Bitcoin in total network value, the price reaction would be dramatic. Treasury Secretary Bessent has forecasted stablecoin growth at the $4 trillion level, a scale that could lift Ethereum's market size into the tens of trillions and send its price far beyond $18,000 per coin. Do you believe this is really possible, and would there be a catch? Share your thoughts in the comments. Thank you for sticking with us until the end of the video. If you found this breakdown helpful, make sure to like the video, subscribe, and check out our other uploads for more content that helps you build smarter, live better, and stay ahead. See you next time. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.